Is the Bitcoin bubble about to explode, or are we about to see huge, humongous new highs this coming week in Bitcoin and also in gold? Is the pound still going to be strong against the dollar, and how is silver going to do? These are all things that are going to come in this week, but this video is all about whether or not you should or shouldn't buy into Bitcoin right now, and whether or not you should sit back and just wait for the price to crash down. With that said, if you are new to the Bitcoin market and you are wondering whether you should or shouldn't buy into Bitcoin, I'm going to talk about my investment, my portfolio, when I think I should buy and when I think I should sell. I'm not a financial advisor or a professional trader. I don't do this for a living. I literally just trade my own money for my future investment. So anything I say right now is literally all based upon what I'm doing with my money. So please don't take it 100% seriously, but you are more than welcome, obviously, to listen on to understand what goes through my head when I think about doing a trade. With that said, my name's David Thorne. I super enjoy making these videos. So without any further ado, let's get started. So right now we're looking at the Bitcoin Euro price. It's going to be the same basically with the dollar and so on, but I'm working euros, so I'm just going to look at this one. This is now the weekly chart. We can see this big boom, and the candle closed on the Sunday evening with a nice green candle, but you can see we've got the makings of a red candle, or we've got the makings of another green candle. What are these lines up here? These lines are potential. Well, they're not potential. They're where I'm expecting to sell a small portion of my Bitcoin to take profits. At 67,000, these lines are just approximate, and also 72,000, and then just a little bit more at 73,000. But these, like I said, are just taking profits, all right? Now, where do I expect the price to go? Well, I expect the price to go up, sideways, and or down. But for as far as I'm concerned, I want to profit from all of them all the time. So I invest my money long term. So all I really care about when we look at the markets is like on a quarterly level, I'm talking about caring about this big white space area. And for me, as long as the price can follow this line here over the coming 10, 20 years, I really don't care, all right? I don't care whether it goes up and down, just as long as over the coming 20 years, it follows this line, and I will know that my money that I invest will have beaten inflation over that one time when I come to retire at 65, 66 or whatever. And if it goes up really quickly, I'll retire even earlier. So this is my long-term game, is that the line that the growth of Bitcoin will be stable over the coming decades, all right? And yes, there is volatility in the market, but I don't really care about the volatility. I more care about waiting, being patient for the right time to enter the market. Even when you look on the monthly scale, you see here that there's always been a correction. It's always got to come back to some form of line. Now, you don't have to draw this line through the bottom. You could just draw it straight through the middle, and you'd see that it's going to bounce above and below that one line all the time. So at one point, it has to come down. It's got to come down. Let's now look at a weekly level. And as you can see here, we're still super overbought right now. Now, if you don't know what I'm talking about when I'm saying overbought, I'm just saying that the price is way too high and there's too many people buying this stuff at an extreme markup, right? Where they're trying to entice people to come into the market to show that it's a lucrative market. And it is a lucrative market, but this is overpriced. It's overbought right now. And if you do a little bit of research through all hedge fund managers, investment bankers, and so on, they will all say it's a great thing for long term, but it's all overbought right now. The markets, and I say the Nasdaq, the S&P 500, a lot of stocks and shares that right now are all overbought. And it's only really Tesla right now that has gone back down again. But that's a stable stock, really. You know, Tesla is able to go through the rough and the smooth, but it actually makes a product. Cars are being made. You can see profits, you can see losses all the time. So it's a real company that people are going to need those cars over the coming decades. So they are always going to be making new cars and having better technology and investing more money into it. But what you have to understand is just by flooding the market with money, that doesn't make it a better a store of value. It just makes it overbought. So at one point, I need to see this correction to know whether or not buying is an option, right? And right now, buying is not an option, and I'm not going to be caught out by all of this fear of missing out. It's a disease. Fear of missing out is something that you should box up and stick in a cage and just control it. So we need to use logic, reasoning and rationality to decide when we're going to get into the trade. With that said, I've made some moves here, right? And how can you control your FOMO? And what are these moves? Well, let's just make this a little bit. This is not financial advice, but I'm just picking key areas here that I see, right? That I see that the Bitcoin price seems to have gone to, right? And there might be another one here, but if you've been around for a little bit longer, you'd have known, watching the Bitcoin price previously just keep on tanking and tanking and tanking, and it kept on meeting these prices all the time. And these big wicks, you'll see it wicked down and it went and met that wick as well. It wicked down and it went and met that wick as well. I'm going to keep repeating this, right? It wicked down and it met that wick as well. It wicks down and it met that wick as well, right? Do you want me to keep going over this same thing? When you see a big wick, it meets that wick as well, right? It might take a little bit longer. It might take that little bit longer, but it met that wick, right? And it met it in the future. So when you see big wicks, you've just got to remember there's money stuck there, and we are going to collect that money at one point. It might not be today, it might not be next week, but we are going to collect that money at one point. So move 8 should be your target, right? And move 9, this is a smaller one. If it comes down to move 8, this is a big buy, right? Because, well, you shouldn't put all your money in here. You should just put some money in here, because this is going to be profitable when it does make a new all-time high. So what you shouldn't do is get into this market, and this is not what I do. I as far as I'm concerned, is if it gets down to this point, I think that's healthy, right? It's a healthy correction right now. If it goes beneath move 9, this is starting to worry me now, right? That whether or not I should have waited even further. And that's not fear of missing out now. That's the opposite. Should I have waited even further? But it's a long-term thing. I know that I would have sold Bitcoin up here and I would have bought it back at this one cheaper price. So I've now got more Bitcoin than I had before. And that would mean a benefit for the future. So if I come down to this, let's call this then move number 10, right? Move number 10. This would then be at 35,000. Now, you might be people out there laughing, saying it's never going to go to 35,000. But when it was 69,000 or 59,000, they all said it would never go to 15,000. And it did. So Bitcoin can do these moves, and it will do these moves. And if you don't think it will do these moves right now, don't get into Bitcoin. These are normal everyday moves, okay? And this is literally a part of Bitcoin right now. So if you think it's only going to do a 5% move and it's never going to do a 30% correction in a couple of days, don't get into Bitcoin. This is normal everyday stuff. And you have to understand, you have to take the ups with the downs. And when it goes down, it goes down. But it goes back up again, all right? So if you're willing to put your money in at the top, right, then you have to understand that there is a I would say a 90% likelihood at one point you will see more than 50% of your money gone. Okay? But then there is a 99% likelihood, if you wait a couple of years, your money will turn into, say, 50%, even more on your balance sheet, right? And you can take profits, but you've got to have patience. So right now, the market is overbought. Why not just sit back and wait and test these lines? Look, you can see these lines where I've got them on the screen. Look, you can just follow the green things. Just test these lines, and it's the time frames that are your best friend, right? Zoom out and have a look. What do I think on a daily basis is going to happen? If you're wanting to invest on a 15-minute basis, you need to be looking at the 1 minute timeline. But if you're investing for long term, I mean decades, you need to be looking on the bigger timelines, right? You need to be looking like on the monthly timeline and thinking, where is my money going to go? And you think, well, okay, I'm at the top right now. So there is a high likelihood over the coming months that we're going to move into a recession throughout the whole world, and it's going to come back down again, right? And we're not in a recession right now. A couple of countries are in a recession, and about 20-something states in America are in a recession right now, but the whole country's not in a recession. There's many countries in Europe that are on the peak of recession right now. So this is the time where prices start to go down, right? And China right now is just coming out of a recession, right? And they're going to be pumping money into it. I'm not a financial advisor or economist. So all I'm doing is I'm saying that we always see this. I'm 45 years old. I've already lived through a few of these where there's been market crashes and so on, and everyone has been panicking. Now, when people panic, this is when you should be buying, right? It is completely counterintuitive. So when everyone is like saying buy, that's when you need to be sitting back. And if you did buy when everyone was panicking, that's when you should be taking profits, not selling and washing out your whole account. Just every now and again, keep selling profits off. And when it goes down, just start working out which points am I going to get back in again, all right? This is not FOMO anymore, right? You are controlling the FOMO with pure logic. Can you accept your decisions today, in a week or 2 weeks or 2 months or 2 years' time, and think, that was a good decision that I made. It was hard, but for these reasons, write the reasons down. Say, for these reasons, I made this trade. And this was the amount of money that I was expecting to lose. And these are the risks. This is the reward that I'm getting based upon the risk that I took. And if the price comes to this price, an arbitrary price, I'm going to take some profits. And if it comes here, I'm going to take more profits. And it comes here, I'm going to take more profits. This is a plan, right? This is an investment plan. And understand, how long are you going to invest for? And how much can you afford to invest? You don't have to invest everything at once. If you've got a lump sum of money right now that you want to put into Bitcoin, put it in on a weekly basis. Put it in when the market opens on Monday, right? Or put it in when the market opens every day. Or put a little bit in every hour. Or put a little bit in every single month. This is down to you, right? When you feel comfortable. But if you want to invest your money into Bitcoin, investing it on a weekly basis, you're going to get a good average buy-in price on a long term. But if you chuck it all in at once, you're not going to be able to get a good average. So what am I talking about here? Well, if you buy at the top, right, and then suddenly it dumps and you buy here, well, add the two things together, divide it by the number of trades that you made, and that's your average price. So another one here. Look, this is what I'm talking about. So if you buy a little bit at wherever it is today, right, and then tomorrow you buy some more, and let's say that's move 2, and then you buy it move 3, then you buy it move 3A, you buy it move 4, you buy it move 5, buy it move 6. Take all of these values, add them all up, right? Add them all up and divide them by the number of trades that you did, and you'll get the average price that you traded into, okay? And then you'll know, well, if it moves over a specific price, my average price, then you will be in the money. And when you look at this price, you have a fantastic brain in your head, and your eyes are so fantastic at pattern recognition, right? And spotting danger. That's what our eyes are so good at. We spot sweet foods, which is energy. We spot sugary foods. We can see, sugar, that gives us lots of energy. And you can spot danger as well instantly and say, fire, that's dangerous. Or red berries, that's dangerous. Or a big cliff, that's really dangerous. So you need to use this pattern recognition that we have. You know, we've got it built into our brain. And when you see something and you think, oh, wait a minute, that's big red, that's going down. What's your gut instinct? What's your initial instinct? That was your brain instantly telling you what it said. That was your fight or flight telling you what it thinks. If you second guess this, your fight or flight is correct like 99% of the time, because that's what it's designed for, is to get you out of these positions, out of these situations immediately. So if your fight or flight is saying this is bad, just accept it. Sit back and wait an hour, 2 hours, a day, a week, until you don't feel this fight or flight feeling. You think that looks like it's worthwhile doing. Me and my wife, we were literally randomly going to the gym on Friday, and we thought, oh, we'll quickly pop into the bike shop just to have a quick look because we've got some time. And all the prices of the bikes were super cheap. And we wanted to buy new bikes anyway, but we just keep putting it off. And we saw 2 bikes, had an amazing price, amazing quality bikes. And we were like, this deal is amazing. And even the guy said these deals are literally, they've got to get rid of these bikes because new stock is coming in. So we got 2 brand new bikes for a super discount. And we're both happy because we found the opportunity. We've saved our money ready to buy the bikes. And once we saw the bikes, we both decided these are the bikes we wanted, and we bought them. And we actually got better bikes now than the ones we planned to buy in the past because we waited a little bit of time. Now, yes, we could have bought them before, and we probably might have got a better deal in the future. We might have got a better deal in the future, but we could have also got a worse deal in the future. But we took the opportunity. We saw the opportunity there and then, and we bought it, right? But when we went into there before and we saw overpriced bikes, we thought we're not going to buy it. We're just going to sit back. Inflation is skyrocketing at the moment, and we'll get them when the market all goes down. And this is exactly how it works. When we bought our car at just the right point because interest rates were so low. The prices of the cars on the forecourt were literally so low because the dealers wanted to get rid of them because they had more stock coming in. And we got our car an absolute bargain, right? And now it's worth more than what we paid for it. But this is because we utilized the opportunity to buy things. And that is what it's all about, is preparation meets opportunity. It's called being lucky. But you have to have a little bit of discipline with this, all right? And this is what these moves are for, right? These moves are for me to say, okay, can it break move 1? Okay, it did break move 1, first of all. Can it break move 2? And it did break move 2. Can it break move 3? It did. And now it came down to move here. And now can it come and break it again? All right. So this is the question. Can it come and break this move, these areas once again? And we see big wick. It's got to fill it. Look at this wick. It filled it. Look at this wick. It filled it. And it's always going to fill that wick. So the price has got to come back down here to fill this wick. It might not come back down straight away, but it might come back down over here. Now, if it comes down over here, there's a 50% chance it will come to move 4, and there's a 50% chance, there's a 33% chance it will come to move 4, and a 33% chance it will come to move 3, and there's another 33% chance it will just stay in that range. So with that said, if you've got a bit more of an insight now to how I think about trading, right, and I put limit orders in, and I would rather know that my money is in place just in case the price moves really quickly and comes down. I know that the exchange where my money is on, it can do those automated trades for me. And if it does spike through it and I don't get it, c'est la vie. That is life, you know. But at least I know that I position my trades at the right place. But it should all go through. Anyway, with that said, I just want to take the opportunity to thank everyone for all of their supports, all of their comments, all of their likes, and the subscriptions as well. It's amazing how supportive you guys, people, have been on my channel, and I will keep making these videos. Although I am going on holidays soon, so I probably were going to not make it for about 4 or 5 days. Either way, please, if you do have any feedback or any ideas or anything like that, let's just put it down in the comment section below, and I'm always willing to listen. I'm not a financial advisor, right? I'm not a professional trader. Like I said, I'm literally just a person sat in front of a computer looking at these candles and doing my own research about when I think it's best to get in and get out of the market. Me and my wife, we bought Bitcoin. You know, we did FOMO in at like 52,000, I think it was, but we did then buy a little bit more when it went down, a little bit more when it went down, and our only regrets are is not buying it right at the bottom. Right, we got a little bit too, we had too much fear in it that it was going to lose all of our money, because a lot of our money went down already. So you've got to control this fear. And you've got to think to yourself, it's this white space in the future that is so important. It's empty. Where do you see this price going? This is what you've got to think about. Look right. This is all history in the background, looking left. But the history looking left doesn't predict the future, right? It just paints a picture of how the past was. So just because it did something in the past doesn't mean that it's going to exactly happen like that in the future. There are so many other things in the world that could change, right? Yes, 9 out of 10 things could be all ticked off the checkbox, but if one thing isn't right, it's not going to happen. So, and even if it's the smallest thing that needs to change in order to, if it has to be 100% for it to happen, it has to be perfect, right? So always have an anticipation of it going up, it's going sideways, and it's going down, and have your plan. If it goes up, I'm going to do this. If it goes sideways, I'm going to do this. And if it goes down, I'm going to do this. And for these reasons, this is the plan that you have to have. You can't just have one plan. It's going up. That is called gambling, because there's a 66% it will go against you. So with that said, thank you very much for watching. And I hope you've enjoyed this video. And I will see you in tomorrow's video. And hopefully you all profit from the market and you don't get caught out and so on. Thank you very much, and I'll see you in the next video. Ciao, ciao, and goodbye.